Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my medium time frame bullish scenario, where we are looking at a finished wave 1 or A, finished 2 or B, for then continuation to the upside in a wave C or a wave 3. The main question we have to ask ourselves is the low in over here? And that depends on this structure, because it is very difficult from an Elliott Wave point of view to count this low as the low for then the beginning of an impulsive structure to the upside in a wave 3 or a wave C. Because if we count this as an ABC expanding flat, then in a wave C you want to count a 5-wave move, likely to be a 1, 2, 3, 4 and then a wave 5. Therefore, then this is not the low of a wave 5. If you count it like this in a 1, 2, 3, 4, 5, then there's overlap between the low of 1 and the high of wave 4, which invalidates a normal impulse. So then you have to think about diagonals, but then we're having an expanding diagonal, which is extremely rare and therefore never preferred. If we think about a 3-wave structure in here, then we're looking for a WXY or a zigzag. Now a zigzag is a 535, which can work, but then again the low is this low and not this one over here. And if we're thinking about a WXY scenario, then we have to think about a 3-wave structure. So you're going to be like W, X, Y, but Y is extremely short in this scenario. This does not look like a 3-wave structure by itself. So you got to include this bit here. So a W, X, Y doesn't really fit. You could potentially think about a W, X, Y, X, Z, but in this scenario, the W, the X, and the Y, or the Z, sorry, have to be 3-wave structures, and they look impulsive on the lower time frames. So therefore, currently the probabilities are lower for this particular scenario, where then this scenario has the higher probabilities, where we're still looking for a move to the downside in an impulsive structure, a wave C, now working on this wave B, either already finished or a little bit more upside to reach that triple top and then a 5-3-5 wave move. Most common targets for wave B are the 0.382 to the 886, which is a very big area taken from the high to the low of wave A. So now we have this as a 5-wave move for then a 3-wave corrective structure. Now if we then zoom in to this structure over here and how we then count this low as well in the bearish scenario, we're looking at that low as a low of a wave B and then an ABC, an expanding flat to start this corrective structure in the bigger B, because we're looking at an ABC, right? So then we have wave A or W with inside A or W, an expanding flat. Then we have wave X or the low of a wave B for then either a 3-wave ABC in Y, or we're looking for a 5-wave structure in a C. An ABC structure is then an expanding flat in a wave A, wave B, and then a 5-wave move to the upside in a wave C, where the most common target for wave C is between the two purple 1.618s, which is between 30.5k and 30.8k, just above the triple top over here. And for a wave Y, the most common target is the area that we find resistance at the moment, which is between the 1 and the 1.236, taken from the low to the high of W to the low of wave X. Same pool for the target area for wave C. Something I do like to mention is that the 105 over here in purple is a rare target for an expanding flat wave B. Most common target for an expanding flat is the 1.236 to the 1.38, pulled from the low to the high of wave A, but as you can see, this area has not been hit, and this again is a rare area for a wave B, which might increase the probabilities at least a little bit for potentially a wave Y, but then again it very much depends on the lower time frames if we can find another push to the upside and take this high to then create a 5-wave move to the upside, or if we're going to have an ABC on the micro. Because if we zoom in to the micro scenario and we go to the 15-minute over here, then the bearish scenario is that we're then currently already working on the beginning of an impulse to the downside. So we then have a 3-wave structure in that blue wave Y. We're inside the target area for wave Y, as you can see over here, right? Important resistance area. Also in confluence with my white target box now. It became white after price tested it here for the first time. It now tested it twice basically. But this was the resistance area inside the wave Y target area, and we are then counting this move to the upside as a wave A, a wave B, and then a wave C to the upside, where wave C reached the 1.618 trend-based fib extension taken from the low to the high of A to the low of wave B, which is a rare target for a wave C and a common target for a wave 3 in potentially an impulsive scenario, which is coming up next. Now in this scenario, we are then looking for a impulsive structure to the downside, because if this is the high of a wave Y, we now want to see the beginning of a medium time frame wave C towards the downside, meaning volume and impulses towards the downside. Now, therefore, this then over here has to be a wave 1 to the downside, followed by a corrective wave 2, for then this being the beginning of a wave 3 to the downside. And if it is the beginning of a wave 3, you really want to see volume increasing while price is moving towards the downside. You want to see that impulsivity moving towards the downside. If we go to the 3-minute chart quickly, then it is not even that easy to count a nice solid 5-wave structure in here. We can argue it's a 1, 2, 3, 4, 5, and then some sort of a diagonal structure. It can work. It's not the nicest though, so one could also count a zigzag over here, which is then for the bullish scenario very relevant. And if we go to the 5-minute over here, then we have this as a 3-wave corrective structure and then a wave 2 reaching the 786 Fibonacci, which is a common target for a wave 2 taken from the high of C to the low of this wave 1. Now if we go to the bullish scenario, then we are still expecting a bounce towards the upside, as we want to look for a wave 5 over here, where the most common target area for 5 is in between the 1.236 and the 1.618 taken from the high to the potential low of wave 4, or a potential low that is going to be made as price is very close to potentially getting below this low over here. Currently, the target area for 5, however, is in between 30.3k and 30.5k. And in this particular scenario, we are then looking for a 5-wave structure. Now, you also see a vertical line on the chart. And the vertical line is important because it compares the time it took to develop wave 2 with the time it takes to develop wave 4. Usually, wave 4 tends to be a bit longer than wave 2, even though this wave 2 over here is very shallow and quite long in time as well. Wave 4 can still be deep. It hit the 0.5 Fibonacci taken from the low to the high of 3, but it can also still be quite long, currently around the 1.618 Fib time of wave 2, meaning that the price action we have here horizontally is 161% longer than we had, or actually I should say maybe 61% longer than the price action we had in this wave 2, which is fine for a wave 4. Now already in the previous video, I mentioned the bounce over here on the 886, because if this was the low of a wave 4 and this is then a 1, 2 and you look for continuation to the upside, I mentioned that if this is a wave 2, the 886 is a rare target for a wave 2 and it is a common target for a wave B or a wave X, meaning that the probabilities are higher if price touches the 886 that the move up is going to be corrective, which therefore means if the move up is going to be corrective, then potentially downside can still be expected. And that's also what I mentioned in the previous video with, hey, we might be seeing a range for the rest of the day, meaning like go up and go down. And also I explained that the area over here above this high, the reaction we're going to get over here is very, very important. Now price, big bearish CVD divergences, which I'll show you in a second, price moving to the downside. And for me, the only valid move that we can get at the lows over here is potentially a swing failure pattern, close above and continuation for the bullish scenario, because you don't really like to see candles closing below the 0.5, 50-minute, 30-minute candles preferably. This one is acceptable because it was part of a corrective structure to the upside and then a 3-wave move. But over here, if price is moving below this low over here, if we get a swing failure pattern, that could be acceptable. Of course, we have to wait and see for the reaction, because if price is going to dump to the downside, move to lower levels, then the bullish scenario is going to be invalidated and we are going to be looking for the bearish scenario for then continuation to the downside. Of course, that little bit depends on what we see over here. If price does create a swing failure pattern, it's important you see immediate continuation to the upside. You don't really want to see price then ranging right on top of the swing failure pattern level. You want to see it wick, close above, and then eventually move to the upside quite quickly. The longer price is staying below, the higher the probability that price is continuing its way towards the downside. If we then look at the CVD divergences, you can see we have a bearish CVD divergences on the chart where the target, yes, is this low. And it is, as we speak, it would be quite amazing actually if it's going to happen during the video. It's on its way to take this low over here. If we go to the CVD chart, then I mentioned in also the previous video, it's all about the reaction that we get over here. How is price going to react with this area? Now, as price moved towards the upside as we wanted, we saw the bearish CVD divergences both on yellow and on the blue line. It's a double bearish CVD divergence, basically meaning that market longs are being absorbed by big limit shorts. Therefore, there is short pressure or bearish pressure for then a move towards the downside, where then the target is going to be this low over here. Again, if this low is taken, we have to first of all wait and see what's going to happen. But also, if this low is taken, the bearish CVD divergences have played out and are neutralized, and then we wait patiently for price to show us what is next. So if we then zoom out again and look at the probabilities of the different scenarios, then on the medium time frame, the preferred scenario is a bearish scenario, where we are still looking for a move towards the downside, for B to then be in, looking for C towards the downside. And if the high of B is already in with the high that we made over here, then the most common target area for wave C is between the 1 and the 1.236 here, which is between 27.2k and 26.5k, which is interesting because we have support areas here, the big blue support area, as well as the one below, which is sitting between 27.4k and 26.8k, and we have the one between 26.2k and 26.4k. There you go, 26.4k, 26.2k. So that is an interesting area for wave C to the downside, if this is indeed the high then of a wave B and price moving towards the downside. On the low time frame, I am currently neutral, meaning with this scenario, either wave Y or wave C, that is absolutely fine. It very much depends on the reaction we get at the low over here. However, the fact that we got strong bearish CVD divergences inside the target area for Y against a target box as well can increase the probabilities of this being a WXY, finishing with an ABC for further downside. But then again, look at the reaction at the lows, which is then also what I wrote over here, as you can see. Look at the reaction at the lows, and Micro says lows, because that is exactly what we're going to be looking for, these lows over here. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator that you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.